It's crazy how many people in the institutional world are still stuck on zero. Literally zero. It's 80+% of institutions. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in. So it's only 4 more years from now. You will be deemed fiduciarily irresponsible if you have zero.
Mark Yusko is a renowned hedge fund manager and prominent personality in the cryptocurrency and digital asset space. Like every other investor and participant in the space, Yusko is particularly appreciative of the big moves he predicts we will see in the cryptocurrency market come January. In a few short weeks beginning from mid-October, Bitcoin's price has gone from $26,752 to the current price of $39,400, a 47.28% increase in price, all based on expectations that the U.S. Securities and Exchange Commission will approve a spot Bitcoin exchange-traded fund. According to Yusko, that magical moment we've been waiting for will come on January 8, 2024, 2 days before the final deadline for ARK Invest's application. When that moment finally comes and the commission approves one or more of the applications it's considering, Yusko predicts a massive flood of new capital coming into the digital asset space. According to the Morgan Creek Capital founder and managing partner, about 80% of institutional investors currently have zero exposure to Bitcoin and other digital assets. While some of these investors are still blissfully unaware of the importance of these assets, most are aware and very willing to invest, but are being held back by the harsh regulatory environment in the United States. When the approval is announced, the latter category of institutional investors will be able to come aboard freely without fear, and the former will be forced to take a step back and actually do their assignment on digital assets like Bitcoin and others. Either way, Yusko reckons we will be getting a lot of institutional interest and a flood of new capital in early January when the approval is announced. During the latest episode of his weekly Roundup with Blockworks Macro, Yusko also gives his opinion on the ongoing rally in the cryptocurrency market despite the ongoing crackdown on the industry by regulators. Just under 2 weeks ago, the United States Department of Justice slapped crypto exchange Binance with a $4.3 billion fine, one of the largest penalties ever obtained by the department, according to prosecutors. Binance is not only the world's largest cryptocurrency exchange, but its founder and former chief executive officer Changpeng Zhao is also one of the most influential people in the space. Yet, the DOJ announcement did not negatively impact the excitement about 2024. If anything, it has bolstered it. We will now bring you clips from Mark Yusko's latest interview. Please watch to the end, share, and like this video. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks and enjoy the video.
It's a thing of absolute beauty. So we're up 12% in the past 30 days. So it wasn't Moonvember, because it was Uptober, up 29%, but we up 12% in November. So happy December, by the way. And then over the last year, we're up 123%. And this chart is just so beautiful in that you have volatility, which, we always do. And you even have a long period, almost 6 months of no movement, but you have higher highs and higher lows. A series of higher highs and higher lows. That is accumulation writ large. This is one of the great accumulation chart patterns that you will see. And if you go back to that 1 month chart, I think it is.
Yeah, here.
That is an absolute thing of beauty. And think about it, in this month, I tweeted about this the other day. In this month, okay, we had a U.S. government agency, who shall remain nameless, levy the largest fine against the largest crypto exchange in the world, of which it's questionable whether they had any jurisdiction over, but they still did it, forced the CEO to step down from his role. And this chart says, I don't care. I just don't care. And maybe I need a new hashtag. Bitcoin doesn't care. It is in a massive accumulation. And I said, January 8th, King's birthday. That's the day I believe the approval's going to happen. The first they ignore you, then they laugh at you. It's like a bunch of nerds, geeks, play with your magic internet money, whatever. Then it became a threat. And they're like, all right, we'll kill it. We're going to kill it. And they've tried, right? Multiple times. They've tilted at the windmill and the windmill just smacked them down, like literally smacked them down. Like, all right, we can't kill it. All right, you know what? We're going to take control of it. And here's what you do. You go after the highest profile. Stevie Cohen comes to mind in the hedge fund space. And $2 billion. I mean, it just 3-year ban. I mean, just it's like, I've heard this story before. And you get a key figure to step aside so you can put your man or woman in the seat. And then you have control. And you can't beat them, join them. That's what's going on here. This is like a hostile takeover. And it's not like a full takeover. It's not like, Gary's going to sit in the chair and pull the strings. But this is absolutely all right, you're too big to kill, but we don't like you. And we want you to play by our rules. And we want you to pay for our budget for the next couple of years. So that's what they're doing. And some would call it extortion or bribery. Others would call it, cost of doing business. It's kind of like JP Morgan in jolly old England. They have a subsidiary that basically spoofs the price of gold all day long, every day. And they make $20 billion a year. And every once in a while, they get a fine of $1 billion. You can go back and read this in the newspaper, right? No one reads newspapers, but online you could find it. And when they asked the guy, are you going to keep doing this? Or he's like, are you joking? It's the cost of doing business, 5%.
Yusko likens the case against Changpeng Zhao to that of Steve Cohen, an American hedge fund manager and owner of the New York Mets. Cohen founded the hedge fund Point72 Asset Management and SAC Capital Advisors, which closed after pleading guilty to insider trading and other financial crimes in 2013. Like Binance, SAC Capital Advisors agreed to pay $1.8 billion in fines, $900 million in forfeiture, and $900 million in fines. Cohen was also prohibited from managing outside money for 2 years as part of the settlement reached in the civil case. Zhao will be out from all activities involving Binance for 3 years. Just like Cohen escaped almost unscathed and now has a worth of about $20 billion, according to Forbes, there is a lot of reason to believe that Binance, Zhao, and the entire cryptocurrency space will come out of this unscathed and continue to thrive despite the odds. Let's get back to Mark Yusko's interview as he discusses the certainty of a spot Bitcoin ETF in January and what it will mean for the entire space.
People, I think, miss sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balchunis's, I think I'm saying his last name right.
Balchunis. Yeah.
Balchunis, yep. And, 30 trillion, big number, that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like, MicroStrategy or Coinbase because they're listed companies, as opposed to, they like, UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs and they're going to, get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people. I mean, I'm not, and I actually have numbers to back it up because I'm still smiling and dialing and trying to get people to meet. It's crazy how many people in the institutional world are still stuck on zero, literally zero. It's 80+% of institutions. Now it's funny in the surveys, I think like 74% said, oh, we have exposure. I'm like, well, kinda. And what they're saying is, well, we gave some money to this venture capitalist. And we think they have some exposure somewhere. But yeah, okay, fine. But that's not you making a decision to buy a digital asset for all the right reasons, right? The reason to own digital assets is very simple. Let's just talk Bitcoin, and then we can go to the others. But Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. Those are the two lowest correlations of any meaningful asset class, like high yield bonds, hedge funds, private equity, international stocks. If you take anything with, kind of $500 billion and up of value, you could find small things like, stamps or coins that have even lower correlation. But for a meaningful asset class, this is the least correlated of all of them. And so when you add it to a Markowitz framework, meaning, when you take cash, riskiest asset you could ever own because you lose to inflation, and you add bonds, which have more volatility, people are still stuck on this idea of volatility, and volatility is your friend. So what you want are assets like Amazon, like Apple, like Microsoft, not Microsoft, I hate Microsoft, that have this high volatility, but they have long-term accretion to your portfolio. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in. So it's only 4 more years from now. You will be deemed fiduciarily irresponsible if you have zero.
In other news, a recent report by the Federal Deposit Insurance Corporation shows that we may be heading for another banking sector crisis in the United States. According to the agency, U.S. banks are now saddled with a staggering $684 billion in losses on securities. The report also reveals that the total number of unrealized securities in the banking system at the end of Q3 surged by $126 million, a 22.5% increase in the span of a few months. A section of the report reads, though the U.S. economy has remained strong in 2023, the banking industry still faces significant downside risks from the continued effects of inflation, rising market interest rates, and geopolitical uncertainty. These issues could cause credit quality, earnings, and liquidity challenges for the industry. Another banking crisis will be beyond catastrophic for depositors, borrowers, small businesses, and basically every other sector of the economy. However, it will be a big plus for the cryptocurrency industry. Plus, it will be even better if it occurs after the approval of a spot Bitcoin ETF. What are your thoughts on Mark Yusko's predictions and outlook on the industry? Please drop your comments in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.